Joining us now to tell us more about what exactly private equities are in our weekly finance and investment segment is Brendan Caldwell, Director of Caldwell Securities Limited. Brendan, welcome back to Forum Daily.
Nima, always great to be here. Thank you.
Always great having you on Forum Daily, Brendan. Now, let's start with a brief overview of what exactly private equity is.
Well, private equity, broadly speaking, it's investments in companies, organizations that aren't themselves public. So you were talking about Facebook. Once upon a time, Facebook wasn't public. It was private. It was owned by a relative handful of investors. And then it went through a public listing, got itself listed, I think, initially on NASDAQ. And then it's now a public company with millions and millions of owners. So companies that are not owned broadly, that are not listed on the public exchange, investments in those are private equity in a very general or overarching term.
All right, Brendan. So why is private equity important to capital markets?
Well, the ideas have to come from somewhere. So I've often argued that capital markets, the stock market, is the best place to invest in a nation's ideas, because the best ideas eventually or should make it to the public markets. But before a company is ready for public listing, before it's ready for prime time, so to speak, there needs to get capital from somewhere, usually from family and friends when it's first starting out, pre-revenue, and then from angel investors who are putting in money just as it's getting going, and then for venture capital firms that help it get to the next level, and then growth equity investors that invest just before it becomes a public company, and then it does a public listing or initial public offering, IPO process. So to get these ideas from inception to a public market, money has to be invested, and that money is, broadly speaking, termed private equity.
Okay, Brendan. So can you walk us through the mechanics of private equity investing for our viewers?
Well, in the sort of broad brushstrokes I just did, in that you start with friends and family and go through different stages, different rounds of financing as a company goes from a concept to pre-revenue to revenue to cash flow positive to actual profitability. Different sorts of investors invest along the way. The trick, though, is that this market is opaque and not widely available to most investors, and why I'm very keen that more investors be able to get involved in private equity sooner, and that companies have an easier time becoming public. In the old days, going back as far as when Google went public, most of the money was still to be made post-IPO, post-initial public offering, post the company going public. Increasingly, as it's becoming more and more difficult for companies to become public, private companies have waited longer and longer. So we've tried to encourage and make it easier for capital markets to list companies at an earlier stage, so a broader range of investors can participate, and to create vehicles and structures that people can at least indirectly invest in those same private entities.
All right, Brendan. Well, investors are always looking for returns. So how would a private equity firm create value for an investor?
Well, because they can get access to the ideas before they're ready for prime time, there is more risk typically involved. You're investing in private equity. You're not investing in something for which there's a prospectus. There may be a term sheet. There may be an offering memorandum, but not a public document in the way that a prospectus is, because it is not ready yet for a broad array of investors. At least that's how regulators view it. However, the really great returns can come from an idea. I mean, Facebook, since we're using that example, was the idea of one or two or three, depending on which version of the social network you believe, guys coming together with an idea and then turning it into a private entity, a little network for Harvard students, to being what Facebook and now Meta is today. You can make a lot of money along that process. Now, they call these really successful companies unicorns because they're so rare, it's like they don't exist. We only hear about the ones that work out brilliantly, less so about the ones where the idea, for whatever reason, didn't come to fruition. But where private equity can be helpful is providing enough capital at the right time. If the entrepreneur, if the initial stage business people are able to deliver, private equity can help move the process along and ultimately create value for investors and for the economy as a whole as these ideas go from being a concept to a company.
All right, Brendan, thank you for providing us some more clarity on this. Always great having you on Forum Daily. Thank you again for your time today.
Thank you, Nima.